Hello, good day. So, we are here to tackle about accounting for the aspirant student who wanted to take up the course accounting. So, there are two definitions that I get for the accounting. Number one is the definition given by the American Institute of Certified Public Accountant, which states that accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and event, which are in part at least financial character and interpreting the results thereof. So if you would see, this is an art. Why it was called an art? Because it is recording, and you know that recording is a form of art, and also communicating the results would be also an art. It consists of three, which is recording. Recording are usually done in journalizing. You record all the transactions from the official receipts down to the books, which are the journal or the special journal. Then we do now the classifying. Classifying are normally when we classify each account, so that we classify each transactions under recording, and then we sum it up to classify for the different account, which we will discuss later. Then we now summarize. Summarizing now, this is now our financial statement, because we put now all the accounts in a manner that will be relevant to the decision maker. And it's usually expressed in monetary, depending on the functional currency that is being used by the entity. Okay, so these are, but my favorite definition are those definitions coming from the American Institute of Accounting. Why? Because they say that accounting refers to a process. Process because there are 10 cycles that we need to consider in the preparations of the accounting. And it says that it should be identifying this. Now we identify the transaction, whether this transaction need to be journalized in the book or not. Why? Because there are transactions that are accountable, and there are also transactions that are not accountable. Example of these are PO, or what we call as purchase order. Why? Because from the contractual point of view, this is only an order and no contractual agreement, just a mere contractual agreement between the party, and no transfer of goods or services or money. Another thing is the so-called sales order, also the same. Okay? But don't be confused, because under the law, there are some specific order that would be bound to become sales. Irregardless, it's just still an order because it is specific to a certain person. Okay, another is the contractual agreements such as hiring. So these are not yet accountable because there are now no transfer of goods or monetary value between the two parties. That's why we had to determine whether the accounts is accountable or not accountable. Okay? Next, we have the so-called measuring. Measuring is the time that we measure the value of each account that we had to journalize. Example, was the transactions in terms of money, or in terms of what kind of monetary value? Was it in dollar? Was it in dollar? Was it in Philippine peso? Before, according to our law, all transactions should be the currency should be in Philippine peso, because the only value that is legal tender and acceptable here in the Philippines is Philippine peso. But because of the existence of some BPO, or transactions that are highly in volume of other currency, accounting now put it as the functional currency. So, meaning, which currency has the most number of accounts, or the most number of transactions, that is the one that we considered as the functional currency. Like, for example, if it's BPO, all the expenses are in Philippine peso because we only hire employees that are paid in Philippine peso and the taxes. But all other transaction is in foreign currency. So, for tax purposes, it would be Philippine peso, and for the salary of the employee. But later, it should be converted to this functional currency, which is the volume of the transaction. It could be dollar or other currency other than Philippine peso. Okay. Next, we also do the communicating. So, what do we communicate? Now, usually, we communicate the activity of the transaction. So, or of the business. So these are usually our so-called financial statements. Financial statements. So what are the financial statements? So there are very different. Number one is the so-called balance sheet. So balance sheet, or in some books it also called as the statement of financial performance. If you would see, the definition itself is already in there in the statement of financial performance, because it indicates the performance being given or being accumulated by the entity over time from day one to up to when the FS is prepared. That's why if you would see under the balance sheet or statement of financial performance, the date was stated as of. So why as of? Because it's from day 1 up to the period the financial statement is being prepared. Okay? So this is balance sheet. Next, we also have the income statement. Income statement. In some book, it's called statement of financial performance, because this one now is statement of financial performance, meaning this is now classified by what we call now the year-to-year basis. So year-to-year, so in accounting, we have two kinds. Number one is the calendar year, and then the other one is the fiscal year. So under the calendar year, it starts from January 1 and end up on December 31. Fiscal year, it starts any day of the year and end after 12 months of that period. And normally, we use calendar year. Why it's year to year? Because if you would see the financial statement under income statement or financial performance, it is prepared with stated for the year ended. Why? Because this statement shows the individual or shows the person reading it that it is only the performance of the entity within the period. Whether the entity was profiting for a certain period and over the next. Because imagine, if it's just like as of, you will never know what period the entity become profitable or not. Next, we also have the statement of cash flow. Statement of cash flow. So, this, from the word itself, cash flow, so it specify all the incoming and outgoing of cash. So, meaning these are only for cash purposes. Okay? So, cash usually has three categories. Later, we will discuss each. Next, we also have statement of equity. So, this state whether the period or the accumulations of the capital of an entity. And lastly, one of the most important is our notes to financial statement. This notes for financial statement usually give us the overview of all the relevant information of the business, like who owns, from where it started, how many number of employee, and what are the standard being adopted by the entity. Okay, as well as all the methods being adopted by the entity. Okay, so let's first start. So balance sheet usually have three elements. These are, if you would see, there is also a equation which is, they said that asset is equals to liability plus capital. Why? So take note, asset, these are the resources of the entity, and who finance the asset? These are our creditor, and of course, the owner also finance the entity. So if you would check, this two is somewhat same as liability, except that the creditor or the lender has the preference over the owner or the capital. Why? Because this is the one who manage, whereas the other one is just giving a trust to lend that entity. Okay? Next, for income statement, we have two. We have the revenue and the expenses. Okay? So, revenue are our sales, gains, or anything that would profit us. And the expenses are the things that we incurred in order to to have this so-called revenue. So statement of cash flow has three. We have the operating. This pertain to the operation of the entity. Financing. This pertain to the sourcing of fund. And lastly is the investing. This pertain to the things that the entity would wanted to invest, like capital outlays, big chunk of what long-term planned equipment. Okay. Next, this is also the time wherein we communicate because the financial statements give us information about the activity of the entity. So that they will permit informed judgment by the user of the financial statement. So, or by the user. The user, it could be the lender, so that the lender would know whether to lend additional money. The government, so that they would be pay taxes, the employee, and so on and so forth. Okay?